Welcome students for another class of cost accounting. So this lecture series is focusing on the syllabus of CA and CMA intermediate cost accounting. Today's class I'll teach you job costing and batch costing. So in the previous class I explained cost sheet format and few types of cost sheet problem, how to compute the cost of an object. So in today's class we will see a method of costing, particularly job and batch costing. So first understand what is job costing. What is job? Job in a general, very simple explanation, it's a non-standard product. It's a customized product. It's not that a factory produces it on a regular scale. It's a special requirement from a customer and the factory produces that product, maybe limited numbers. So such thing is called as a job. In job order, no two orders are same. That means now customer gives an order, let's say a bicycle, special bicycle, and after 2 months he will make some changes and he will give another order of another bicycle. So these two orders are treated as job and no two jobs are same. They have a distinct requirement of customer. In job costing, the unit of cost is taken as a job and cost sheet is prepared for the entire job. In the job costing, you have to compute the cost sheet and find out the cost of the job. So that will be the requirement of you in the examination. So let us understand what to do and how to compute. So this is a typical job sheet format, but in job cost sheet you don't have to prepare a detailed cost sheet pro forma. It is very simple. You have first three, which are prime cost element, direct material, employee and expense. Then you have to add factory overhead. With this you will get production cost. To that you have to add administration and selling and distribution overhead. If you recall here, between these two you had finished goods adjustment. But in job, since every job is a distinct, there is no opening and closed finished goods. So that step is eliminated. Hence you have to add administration and S&D overhead. You will get total cost of the job. Then you add profit. Then you will get the selling price of the job. In this, it is very important to note that whatever input you give is for the job. The material, employee expense used for the job. Similarly, factory overhead used for the job. Why I am stressing this, you will understand when we see one problem. Let us take one problem. Now pause for some moment and try to go through the data given in this question. So if you closely observe here in this question, you have material detail here, also here. Then you have labor or wages detail here, then also here. It is very easy to get confused if you have not gone through the basics of job costing. So I will explain this question first, then we will solve this. In a job costing problem, you will have data of previous year. Why this is given? So that you can calculate some rates using the data given in the overhead and the direct wages. What rates you will calculate, we will see. So here the job number is 9669 and all the data you have to use. Here prime cost or the material cost and the department hours are given. They will directly go because they are used for the job. But the total amount of direct wages and the factory overhead, whatever is given, that you have to use in calculation of overhead. Here plus 33% on prime cost is given. That is not a right way to calculate. You have to solve job cost sheet with the job cost sheet pro forma. So here I have written the job cost sheet pro forma starting with the direct material. Then you have direct wages. In the direct wages, hours are directly given 28 and 10. I have taken directly. Direct material I am taking 13.5 directly. In the direct wages, it is 25 paise per hour. So 25 paise into 20 is 5. Similarly, B and C you will get 2 and 2.5. So total direct wages is 9.5. After this, next I will calculate the prime cost. Prime cost will come 23. So up to here there is no change. So next in the cost sheet is factory overhead. Here also I have the hours, which is 28 and 10 hours. I have put it. But you have to multiply this with overhead recovery rate. That is not given in the problem. So you have to calculate this overhead recovery rate using the previous year data, which is direct wages and factory overheads. Now I will prepare a small table for direct wages rate and hours and the factory overhead. So department ABC, wages I know, wages is given 10,000 rupee, 12,000 rupee and 8,000 rupees. This I will record here. In the data, what it is given, it is 25 paise per hour. That means in 1 hour, I will get 4 rupee. Similarly, if it is 10,000 rupee, then I should have worked 40,000 hours. And B will work out to be 48,000 hours. And C will be 32,000 hours. Now I have hours. I will now record factory overhead data 4,000 rupees, 6,000 rupees and 2,000 rupee. Since I have hours and factory overhead amount, I can calculate rupee per hour, that is the overhead recovery rate. So 4,000 divided by 40,000, I will get 0.1. Similarly, 6,000 divided by 48,000, I will get 12.5 paise, and 2,000 divided by 32,000, I will get 1 by 16, which is 6.25 paise. So now I know these recovery rates. I will multiply with these hours. So 20 hour into 10 paise, 8 hour into 12.5 paise, 10 hour into 6.25 paise. When I add all of this, I will get 3.625. The next subtotal is factory cost. So factory cost is prime cost plus factory overhead 23 plus 3.625. I will get 26.625. To this I have to add selling and distribution overhead. So selling cost in the problem statement is not directly given, but previous year figure shows selling cost is 13,000 rupees. So selling cost is typically recovered as a percentage of production cost. So we have to calculate the cost sheet for the previous year, which I have represented here. If you total all of this, selling distribution overhead is 13,000 and factory cost is 1.3 lakh. The direct material, direct labor and factory overhead cost I have taken directly. So selling distribution overhead as a percentage of factory cost will come out to be 13 divided by 130, 10%. 10% of factory cost is selling and distribution overhead. The same thing I will take it in my cost sheet. So 10% of 26.625 is 2.6625. When I total this, I will get the cost of sales, which is 29.2875. And the question asks that I have to add 20% of profit on this. So the question expects you to draw up a job cost sheet, which is already done. Then add to the total job 20% of profit. So this is a profit on the cost. So add profit 20% of 29.2875, which is 5.8575, and when I total it I will get 35.15. So that is the my job price. So remember, just summing up, first you prepare the job cost sheet pro forma and fill the data relevant to job. Typically overhead rate and selling distribution rate will not be given, so for that they will give previous year figure or some reference data. Using that you have to calculate a recovery rate and then calculate job overhead and job selling and distribution overhead. Let us look at another job cost sheet problem. So pause here for a moment, take a screenshot and read the problem carefully. Now let us go through the problem statement. So what is the question here? You have to prepare a job cost sheet for job B124 and you have to derive the price with 20% margin on sales. So first write in the job cost sheet problem, write the cost sheet pro forma and start filling whatever data is directly available. So in this case, the direct material 3 kg at 5 per kg. So 3 into 5. So 15 is the direct material. Then direct wages 4 hours at 9 per hour. So 4 into 9 you will get 36. So prime cost is 51. Then next step is calculation of factory overhead. In the problem statement, what all detail is given with respect to factory overhead? Production overhead is budgeted 2,40,000 for the period, recovered on the basis of total 30,000 labor hours. So what is the meaning of this? So total is 240 divided by 30,000 labor hours, you will get 8 per hour. So here 4 hours were used, so 4 into 8 you will get 32. So factory cost you will get it as 83. Next is selling, distribution and administration overhead. In the problem statement, the data related to S&D is given 150 for the period. They are to be recovered on the basis of total production cost of 750. So if you have to derive the rate for S&D, so total S&D is 150 divided by production cost is 750. That means 20% of factory cost. So 20% of factory cost. If you substitute this, how much you will get? 16.6. That means your cost of sale is 99.6. So next portion calculation is profit. Profit is not given as a percentage of cost. So what you should do here, if it is given on percentage of sales, you have to calculate sales first. Sales is equal to cost of sales divided by 100% minus 20%. So that means 99.6 divided by 0.8. So you will directly get sales, which is 124.5, and the balancing figure is your profit, 24.9. It's a simple problem, but many students get confused what to do. Whenever there is a job cost sheet problem, you have to take only those which are relevant to this job. So for the period, like overhead and overhead cost, production cost, which are budgeted for the period, should be used to derive rates, production overhead rate, S&D overhead rate. So next topic for the day is batch costing. Similar to job costing, here also the cost sheet pro forma is almost same. Only thing is you will have an addition of setup cost. We will see what it is. So what is a batch? In certain manufacturing facility, the output is manufactured in a predetermined lots. So these lots are called as batch. For example, 1 lakh units of medicine. So all these pharma or FMCG products, they are produced in batches. Here the cost object or the cost unit is a batch. So your cost sheet will be with respect to a batch, and whatever cost per unit you have to derive using total cost divided by total number of units in the batch. And for each batch a separate sheet, cost sheet, is prepared. One of the important concept in batch cost sheet is economic batch quantity, EBQ. This formula is very similar to your EOQ. Only difference is instead of ordering cost, here you will have setup cost per batch. What is the setup cost? Take an example, I am manufacturing something on a batch. So for each batch there will be some cost incurred to start the production of that batch. Typically what are these? So you may have to readjust the machine, you have to reset and recalibrate the machine, you have to refill the material for the batch. All this requires both material, manpower and factory overheads. So all this pooled will be called as a setup cost per batch. In the formula of EBQ, instead of ordering cost, you will be using setup cost. So let us understand one simple problem. ABC Limited is committed to supply 24,000 bearing per annum. So this is your annual demand. It is estimated that it costs 10 paise as inventory holding cost per bearing per month. But in the formula of your EBQ, this is you have to take inventory cost per annum. So that means this 10 paise you have to multiply by 12. You will get 1.2 rupee as inventory carrying cost. And the setup cost per run of bearing manufacture is 324. This is nothing but your setup cost. If you substitute everything, so you have to take 2, then 24,000 is the annual demand, and 324 directly given. Carrying cost you are multiplying by 12. So if you calculate, you will get economic batch quantity of 36,000 units. That means when they manufacture each batch with 3,600 units, the costs are very optimum. So they may also ask what is the carrying cost per batch. So carrying cost is given by the formula half into C into unit rate into quantity. So same formula which you learned in your EOQ, same formula applies here also. So let us start with a batch costing problem. What are the data given here on the left hand side? Component XYZ is made entirely in cost center A100. Material cost is 8 paise per component. This is required. And each component takes 15 minutes to produce. This is also required to calculate overhead and labor cost. The machine operator is paid 75 paise per hour and machine hour rate is 1.5 per hour. Setting up cost, so directly not given, but what it is said, the setting up takes 2 or 30 minutes. On the basis of this information, prepare a cost sheet for 10, 100 and 1000 components. It's a very easy problem. First you take 10 component batch and populate material cost. So material cost 8 paise into 10 you will get 0.8. Then employee cost is directly given, which is 0.75 per hour, and in 1 hour 4 units are produced. So 4 into 0.75 you will get 1.875. After this overhead is 1.5 per hour and similarly 15 minutes per component, so 1.5. If you multiply by number of component you will get 3.75. Then total production cost, if you add these three you will get total production cost. Next is setup cost. So the detail given here is 2 or 30 minutes is required for setting up. That means for this 2 and 2 hour 30 minutes you have to take both machine operator wages and machine hour rate. So when you add these two you will get total setup cost 5.63 Add 3.75 and 5.63, you will get total cost. This is total cost per the batch, 12 rupee. Divide by 10 quantity per batch, you will get 1.2 rupee as a unit cost. If you have to calculate same thing for 100 and 1000, the setup cost remains same. So that is the most important point. So this is constant for either 100 or 1000. What is the changing cost? Material cost is changing, employee cost and overhead, these three are changing. These three are directly linked to the component, whereas setting up cost is linked to how many batches you are going to set up. So I hope that is clear. Job cost sheet and batch cost sheet are very simple. If you get it in the examination, you will get it easily 7 marks. So you have to pay attention, take only relevant cost for the job. If the periodic cost like such as factory cost or overhead cost is given, you have to derive the overhead rates and calculate it in the job cost sheet. So thank you for your time. I hope you could gain some understanding of the job cost sheet in today's class. We will start process costing in the next class.